Greetings from our team at Robert & Jones Wealth Management. This is Jack Jones, the managing partner, with our September monthly market update. We remember those that lost so much 20 years ago as we honor everyone that day and every day since that's fought to serve, protect, and defend our freedom. Remembering on Flight 93, the characteristics of a plan, a vote, a prayer, and then action to save those that they would never know. And then fast forward 20 years at the end of August, 13 service men and women in a hostile place, again, serving us and serving those that they did not know. For all of those that lost and for all of those that have served that day and since, we honor and remember. We talked in August about the dual mandate of the Fed and how these two issues with inflation and or price stability and maximum employment still provide mixed signals. We'll revisit that briefly today. The most recent jobs report only added 200,000 jobs. This is a very disappointing report. Over 700,000 was expected. Whether this is a trend or not remains to be seen. Part of the issue with unemployment or the employment picture is, again, the ongoing issue of a weak jobs report like this one and 10 million jobs that are available. Again, whether we revert to some kind of an average of over 700,000 a month like we've seen the last few months, or whether this weakness persists is something that we're watching very carefully. We're also watching inflation. You've seen us talk recently that inflation is running at about a 13-year high, up about 5% over the last 12 months. However, the 10-year Treasury still trades today at about 1.4, so that gives us an indication as to where interest rates are. There's a 4% gap between those two numbers, which is high as that's been in almost 40 years, since 1980. So again, which one of these is right, what interest rates are predicting and what the inflation rate actually is, remains to be seen, but again, something that we're watching very carefully. Volatility is something that has been very quiet this year. In 2020, as an example, you had plus or minus 2%. You had 44 days trading with that characteristic. This year so far, only 4. So volatility has been in full retreat thus far this year. And this gives you an indication as to just how normal volatility is. And this shows calendar year return since 1980. And on average, you got a 14% decline intra-year, even though the markets were positive 31 of those 41 years. So if we are in an inflationary environment, on the stock side, this is what we could look as an inflation hedge, and we own commodities and energy stocks and included those in the recent rebalance. Also on the bond or fixed income side, you want to own things like emerging market bonds and high yield, both of which we own through the recent rebalance. So another indication of a position that we own through the recent rebalance is emerging market exposure, but ex-China. So again, what this gives us is a exposure to emerging markets that we want to be in, but with a heightened geopolitical risk of China, we're excluding that. So again, this is a position that we own that owns these areas of the emerging markets, which we think have an opportunity for growth, but it excludes China. Another issue that we're watching carefully is the amount of money in money market accounts. This has gone down from 4.8 trillion a year ago to about 4.5, but that's still a lot of money that is earning basically nothing in money market accounts while inflation's picking up. So that, whether that's reinvested up the capital stack into bonds and equities, or reinvesting in small businesses, or just pent up spending, remains something that we're, again, keeping a very close eye on. Profits are up overall. 491 of the S&P 500 companies have reported, which is 98, just under 99% of market cap. and 86% have beaten their EPS estimates. And of that 86, 83 have beaten on the top line or on the revenue side. So the profit picture for US companies looks very good. Again, there's still a lot of risk below the surface, but from a profit standpoint, the outlook is positive. So we hope you'll join us for an in-person client appreciation event on December 1st at Perry's. More information about that coming soon. So with that in mind, we'll close. Thank you for tuning in to our September monthly market update. We want to specifically thank our valued clients for the trust and confidence that you place in us. If you have any questions about anything discussed here, please feel free to reach out to us and let us know. Until we see you again, hopefully in person, stay well and take care.